12 assets that make you rich. Build your wealth today. What's going on, everyone? It's Abel here. And listen, let's be real. We all want to be financially secure. We want that feeling of knowing our money is working for us, not the other way around. And the truth is, building wealth isn't about luck. It's about understanding the game, making smart decisions, and having the discipline to stick with it. That's why today, I'm breaking down 12 powerful assets that can help you build real, lasting wealth. We're going deep on each one, so you can make the most informed decisions for your financial future. All right, let's talk real estate. This is where it all starts for so many people. Real estate is tangible, a strong hedge against inflation, and can generate serious cash flow. Not just your primary residence. Think rental properties, commercial buildings, even land. Each comes with its own opportunities and challenges. Owning a piece of the earth can be a powerful wealth-building tool. There are ways to start with less capital. House hacking, where you live in one unit and rent out the others. Do your research, understand the market, and find a strategy that aligns with your goals. Real estate isn't just about appreciation, it's about generating passive income and building equity. Next up, let's dive into the world of stocks. When you buy a stock, you're buying a tiny piece of a company. As the company grows, the value of your stock goes up. There are many ways to invest in stocks. For most, start with index funds or ETFs. These spread out your risk. The stock market can be volatile, but it trends upwards over time. Let's face it, not everyone's cut out for the roller coaster ride of the stock market. If you're looking for a more stable, predictable investment, bonds might be your jam. Bonds are essentially loans that you make to governments or corporations. In exchange for lending them your money, they agree to pay you back with interest over a set period of time. Bonds typically offer lower returns than stocks, but they also come with lower risk. This makes them a great option for preserving capital, especially as you get closer to retirement. By combining bonds with stocks, you can potentially smooth out the ride and reduce the overall volatility of your investments. Bonds can play a crucial role in diversifying your portfolio. Let's talk about making investing easy and accessible. That's where mutual funds come in. Imagine a basket filled with different stocks, bonds, or other assets. You pool your money with other investors, and a professional manager handles the portfolio. Mutual funds offer instant diversification. Instead of picking individual stocks, you're investing in a basket of assets. Mutual funds come with fees, known as expense ratios. They simplify your investing strategy and offer a diversified portfolio. Now, if mutual funds are the easy button, ETFs are like the turbocharged version. ETFs, or exchange-traded funds, are similar to mutual funds in that they offer instant diversification through a basket of assets. But here's the key difference. ETFs trade on stock exchanges, just like individual stocks. This means you can buy and sell ETFs throughout the trading day, giving you more flexibility and control over your investments. Plus, ETFs typically have lower expense ratios than mutual funds, which can save you money over the long run. You can find ETFs that track specific market indexes or focus on specific sectors. Whether you're a seasoned investor or just starting out, ETFs can be a powerful tool for building a diversified portfolio and achieving your financial goals. All right, let's talk about building something from the ground up. Owning a business can be one of the most rewarding, albeit challenging ways to build wealth. It's about taking an idea, turning it into a reality, and reaping the rewards of your hard work and dedication. Now, starting a business isn't for the faint of heart. It takes guts, determination, and a whole lot of hustle. But the potential rewards can be life-changing. When you own a business, you're in control. You call the shots, you make the decisions, and you get to see your vision come to life. Plus, the financial upside is unlimited. If you're up for the challenge, the rewards can be truly extraordinary. Intellectual property. Turning ideas into assets. In today's knowledge-based economy, ideas are worth their weight in gold. Intellectual property refers to creations of the mind, like inventions, literary and artistic works, designs, and symbols. Protecting your intellectual property through patents, trademarks, and copyrights can be a lucrative way to generate passive income and build wealth. Every time someone uses your patented invention, they pay you a licensing fee. Every time someone buys a product with your trademarked logo, you earn royalties. Your ideas have the power to generate income for years, even decades to come. Protecting your intellectual property is crucial for safeguarding your creations and maximizing their earning potential. Commodities, hedging against inflation and uncertainty. Let's face it, inflation is a fact of life. Over time, the purchasing power of our money erodes and the cost of goods and services goes up. Commodities are raw materials or primary agricultural products that can act as a hedge against inflation. Think about things like oil, gold, silver, wheat, corn, and coffee. When inflation rises, the prices of commodities tend to rise as well, which can help to preserve your purchasing power. Investing in commodities can be volatile in the short term, but over the long term, they have historically held their value relatively well. Commodities can be a valuable addition to your investment strategy. Cryptocurrencies, navigating the Wild West of digital assets. Cryptocurrencies have exploded in popularity in recent years, offering the potential for massive returns, but also coming with significant risks. Cryptocurrencies are digital or virtual currencies that use cryptography for security. They're decentralized, meaning they're not controlled by any government or financial institution. This has made them incredibly popular with tech enthusiasts and investors looking to disrupt the traditional financial system. Investing in cryptocurrencies is not for the faint of heart. The market is incredibly volatile, with prices swinging wildly up and down. But for those willing to stomach the volatility, cryptocurrencies offer the potential for life-changing returns. For centuries, gold and silver have been seen as safe haven assets. In times of economic uncertainty, political turmoil, or even natural disasters, people turn to precious metals as a store of value. Gold and silver are tangible assets with intrinsic value. They can't be printed by governments or devalued by inflation. Precious metals don't typically generate the same kind of returns as stocks or real estate, but they can provide a sense of security and stability in a portfolio, especially during turbulent times. You can invest in precious metals in a variety of ways, from buying physical gold and silver to investing in gold and silver ETFs or mining company stocks. Precious metals can play a valuable role in your overall investment strategy. Investing in collectibles can be a great way to combine your passions with the potential for profit. We're talking about things like rare coins, stamps, vintage cars, art, antiques, even comic books. The value of collectibles can fluctuate wildly based on factors like rarity, condition, and market demand. It's important to do your research, understand the market, and only invest in items that you're genuinely passionate about. Collectibles can be a great way to diversify your portfolio and potentially hedge against inflation. Plus, there's the added bonus of owning something unique and historically significant. Investing in collectibles should be seen as a long-term play. It's about appreciating the value of these items over time and potentially reaping the rewards down the road. While not the most exciting investment, savings accounts are the foundation of financial security. They provide a safe and accessible place to store your emergency fund, short-term savings, and money you'll need in the near future. Savings accounts don't earn much interest, especially in today's low interest rate environment. But that's not really the point of a savings account. The point is to have a safety net, a place to park your money where it's easily accessible and won't lose value. Think of your savings account as the foundation of your financial house. Without it, you're more vulnerable to financial shocks and setbacks. Make sure you have a healthy emergency fund stashed away in a safe and accessible savings account. And there you have it, the 12 assets that can help you build real, lasting wealth. Remember, building wealth is a journey, not a sprint. It's about making smart decisions, staying consistent, and having the patience to let your investments grow over time. Don't get caught up in get-rich-quick schemes or trying to time the market. Focus on the fundamentals, diversify your investments, and stay informed. The most important investment you can make is in yourself. Educate yourself about personal finance, invest in your skills and knowledge, and surround yourself with people who support your financial goals. Start small, stay consistent, and never stop learning. I'll see you in the next video.